As a new year begins, you are probably considering what stocks to invest in for 2024. Imagine having insights from a renowned investor at your fingertips. What stocks might catch his eye this year? Think of this as a friendly chat over coffee, where we explore the potential gems in the stock market together. It's about getting savvy with your investments, guided by Ackman strategies. So let's talk about Bill Ackman. You've probably heard his name in financial circles, right? This guy's a big deal on Wall Street. Founder of Pershing Square Capital Management, he's not just playing in the minor leagues. We're talking about managing an equity portfolio of over $10.4 billion. Impressive, huh? But what makes Ackman stand out isn't just the big bucks. It's his knack for making moves that turn heads in the market. He's got this chess master vibe, always thinking several moves ahead. Now, on to Ackman's thoughts about the economy. Lately, he's been eyeing the Federal Reserve like a hawk, precisely their potential interest rate cuts. A recent blog post by Bloomberg revealed that Ackman believes the Fed will cut rates as early as Q1 of 2024. Why does this matter? Well, these rate decisions can make or break the market. Ackman's not just watching, he's analyzing every move, trying to predict the next big swing. You might be wondering, what's Ackman's take on the current state of the economy? It's a bit sort of reading tea leaves, but Ackman's got his theories. He's concerned about the actual interest rate and how it impacts the economy. In layman's terms, it's all about understanding the cost of borrowing money and how this affects everything from big corporations to our daily lives. But let's get to the real deal, Ackman's investment strategies. This guy's philosophy? It's all about long-term gains. He's not chasing quick profits, he's playing the long game. And his recent portfolio changes? Intriguing to say the least. He's been shifting his focus, adapting to the market's rhythm. It's like watching a seasoned conductor lead an orchestra. Every move is calculated and precise. One of his strategic plays has been against 30-year Treasury bonds. Why is this interesting? These bonds are like the pulse of the economy. Betting against them? That's a bold move, signaling Ackman's reading of the market's future. It's not just about stocks, it's about understanding the bigger financial picture. Now, let's chat about the top Ackman stocks to invest in for 2024. When we peek into Bill Ackman's portfolio, one standout stock is Chipotle Mexican Grill, CMG. Now, why does this catch our eye? For starters, Chipotle's financial health is pretty robust. They've got about $1.45 billion in cash and, get this, no debt. Plus, their free cash flow margins are over 15%. That's not just good, it's like having a secret sauce in the financial world. It's no secret that Chipotle has been a star in Ackman's portfolio, and for good reason. First, let's talk about Chipotle's position in the market. Ackman's investment fund, Pershing Square Capital Management, has a significant stake in Chipotle, making up more than 18.8% of the fund's portfolio. This isn't just a casual investment, it's a major show of confidence from one of the big players in the investment world. Pershing Square holds a considerable 3.4% of the company, cementing its position as a key holding in Ackman's strategy. Now, on to the meat of the matter, Chipotle's financial health and growth prospects. Chipotle's story is one of impressive growth and strategic advantage. The company has forecasted a more than 20% increase in EPS, earnings per share, over the medium term, showing solid growth prospects. This is no small feat in the current macroeconomic landscape, which speaks volumes about the company's resilience and strategic positioning. A critical aspect of Chipotle's success is its unique position as a quick-service restaurant (QSR) chain that owns all its restaurants. This approach allows Chipotle to maintain full control over food quality and benefit from economies of scale, leading to steadily rising margins and impressive profitability. The company's balance sheet is also robust, with minimal debt, which positions it favorably in uncertain economic times. This financial strength has translated into strong cash flow generation and significant bottom-line growth, particularly in their Q2 performance. However, it's crucial to note that Chipotle's valuation does introduce an element of risk. The stock currently trades at a rich multiple, leaving little room for error. This means that any shortfall in growth estimates could lead to significant PE compression and potential declines in the stock. It's a reminder that even with a company as strong as Chipotle, there's always a risk factor to consider. Regarding its product pricing strategies, Chipotle has successfully managed to navigate the restaurant business landscape. Analysts are closely watching how Chipotle's aggressive pricing affects demand, especially considering the impact of upcoming student loan repayments on its target consumer base. The company's ability to continue bucking general trends in the restaurant industry remains a key area of focus for investors and market watchers alike. The second top stock to invest in is Restaurant Brands International, QSR. This is another crucial stock in Bill Ackman's portfolio. QSR has demonstrated notable system-wide sales growth. In the third quarter of 2023, this growth was 10.9% year-over-year, with a total system-wide sales figure of over $7 billion. QSR stock rose by 7%, surpassing the industry's growth of 1.8% in the same period. This can be seen from the image excerpt from Zacks Investment Research showing the stock risk in blue. This growth was driven by increases in comparable sales across its brands, including a 6.8% rise at Tim Hortons and a 7.2% increase at Burger King. The net restaurant growth also played a significant role, with the overall restaurant count growing by 4.2% year-over-year. Strategically, QSR is making significant investments in its brands. For instance, the Reclaim the Flame plan by Burger King involves a $400 million investment over its lifetime. This investment is split between advertising, digital investments, remodels, restaurant technology, and kitchen equipment enhancements. As of September 30, 2023, approximately $33 million had been invested in digital initiatives and $45 million in restaurant upgrades and technology. A crucial part of QSR's strategy is its focus on digital sales, which saw a more than 40% year-over-year increase in the third quarter of 2023. This growth is attributed to strong contributions from kiosks and delivery services. For instance, Tim Hortons reported around 5 million average monthly users on its digital platforms, maintaining a digital sales mix of about 30% during the quarter. However, it's also important to note QSR's challenges, particularly rising labor and commodity costs. The total cost of sales increased by 2.4% in the third quarter of 2023, mainly due to these rising costs. This increase poses potential risks, as further inflation could lead to foreign exchange volatility and higher interest rates, which could adversely affect the business and operations. Regarding analyst ratings and forecasts, the consensus among analysts seems to favor an optimistic outlook for QSR. The average earnings per share (EPS) estimate for the current quarter, as of December 2023, is 74 cents. With an anticipated growth to 73 cents in the next quarter, March 2024. Also, the current year 2023 EPS estimate stands at $3.23, which is expected to increase to $3.42 in 2024. Revenue estimates also project growth, increasing to $7.38 billion in 2024. Overall, QSR's diverse brand portfolio, strategic initiatives, and growth in digital sales position it as a compelling choice in Ackman's portfolio. However, the challenges it faces in the current economic climate, particularly concerning cost pressures, are factors that investors should consider. Okay, so with these two top solid stock picks, we have three other stocks of Bill Ackman that are also great to invest in 2024. First up is Google Alphabet Incorporated, Google. Ackman significantly increased his holdings in Alphabet Incorporated, adding 1,307,425 shares, bringing his total to 9,377,195 shares. This move was a notable shift in his portfolio and demonstrated his confidence in Alphabet's potential. As of mid-2023, Alphabet had a market capitalization of about $1.658 trillion, and its stock price reflected a year-on-year return of 7.6%. As indicated by its financial ratios, Alphabet's robust financial strength and high profitability make it a compelling choice for investors looking for long-term growth. Second up is the Howard Hughes Corporation with the symbol HHC. As one of the stocks in Bill Ackman's portfolio, HHC has demonstrated mixed performance. In 2023, the company reported a loss of $19.1 million, or 39 cents per diluted share in the second quarter, compared to a net income of $21.6 million, or 42 cents per diluted share in the previous year. This shift in financial performance reflects challenges in the real estate market, particularly concerning land sales revenues and construction costs. Despite these setbacks, the company has seen positive developments, such as strong lease activity in its office assets and robust growth in its multifamily portfolio. Key properties like Starling at Bridgeland and Marlow show promising lease-up rates. Additionally, the company's strategic developments, including selling condos in Ward Village and progressing in its various real estate projects, indicate potential for future growth and value creation. Howard Hughes Corporation has also undergone a holding company reorganization, transitioning to Howard Hughes Holdings Incorporated, HHH, as its new parent company. This change aims to provide financial flexibility and segregate assets and liabilities into separate subsidiaries. Despite challenges in the market, the company has adjusted its full-year guidance positively for MPC EBT and operating assets NOI, reflecting improved sales expectations and strong financial performance across its portfolio. The company's stock has experienced fluctuations, with analysts giving it a buy rating and setting a 12-month price target of $95. This target suggests a possible upside of 14% from its current stock price. The company's financial services sector reported a trailing 12-month return on equity of 3.33% and a net margin of 7.72%. However, investors should note the company's performance against wider market trends and specific challenges it faces, such as increased construction costs and operating expenses. The third stock is Hilton Worldwide Holdings Incorporated, symbol HLT. HLT has shown impressive performance in 2023, reflecting the strength and resilience of its business model. In the third quarter of 2023, Hilton reported a diluted EPS of $1.44, with an adjusted EPS of $1.67. The company's net income for the quarter was a solid $379 million, and the adjusted EBITDA stood at $834 million. This performance was bolstered by a 6.8% increase in system-wide comparable RevPAR on a currency-neutral basis. Hilton also approved 35,500 new rooms for development during this period, expanding its development pipeline to a record 457,300 rooms. The first quarter of 2023 was also notable for Hilton, with diluted EPS at 77 cents and an adjusted EPS of $1.24. The net income was $209 million, and the adjusted EBITDA was $641 million for this period. The company experienced a substantial 30% increase in system-wide comparable RevPAR compared to the same period in 2022. Hilton's development pipeline continued to grow, approving 24,900 new rooms, bringing the total to 428,100 rooms as of March 2023. Reflecting on the last decade since its initial public offering, Hilton has transformed its business model significantly. The company now operates a capital-light, fee-based business and has enhanced the resiliency of its model through strategic spin-offs. Today, Hilton's expansive footprint includes 22 brands and 7,400 properties, with nearly 200 million travelers staying at Hilton-branded hotels in 2023. The Hilton Honors loyalty program has also seen remarkable growth, adding over 130 million members in 10 years, reaching more than 173 million members. Hilton's commitment to an award-winning culture and strategic growth, including the largest development pipeline in company history, positions it well for future success. Remember, investing in the stock market involves risks, and it's essential to do thorough research or consult with a financial advisor before making investment decisions. If you're intrigued by these investment ideas and want to explore further, consider subscribing to stay updated on more insights and analysis. Remember to like, share, and comment on this video to join the conversation.